So we know the housing market is continuing to go up and down. There's a lot of things going on and a lot of news to cover. So I thought for this video that I would do a collaboration with a content creator, Real Estate Mindset. I know you guys watch his channel because on my analytics, it tells me this is a channel that your subscribers watch also. So I thought, hey, two heads are better than one. So let's go ahead and discuss the issues that are going on in the housing market. And then look, also too, I got a green shirt on. This is my interview shirt. How you doing, man?
Orlando, I am doing blessed, and I didn't know I was the first person on your channel, man. I'm so
Yeah.
honored.
Yeah, this is the first time I've had anyone on my channel. I've been on plenty of other people's channel, but this is the first time that I've had anyone on my channel, especially doing an interview. First time.
I'm absolutely honored, Orlando. I'm absolutely honored, man. Thank you.
Well, we're going to get into some questions about the housing market, what's actually going on in this up and down roller coaster housing market. And we've got some, the Real Estate Mindset has some great data that he wants to go over. So let's jump right into it, man. What do you think is going on with all of these price cuts? These massive price cuts that we've seen on Zillow and Redfin. You know, what do you think about that?
Well, I mean, I think the price cuts are here. And I think what's really important, Orlando, is you have to understand that these price cuts aren't seasonal. And again, this is just my opinion. I'm not a financial advisor, right? But, I think the mistake that a lot of economists, a lot of people are making is they're forecasting based on a normal housing market. And they're basing their forecasting on us settling to a new normal. Okay. So what I'm saying is that's not true, that the housing market was created artificially by COVID, by the Federal Reserve. And as a result of us having a similar size bubble as '08 in half the time, that's essentially going to lead to a collapse in pricing. And, in record time, and I'm going to pull up some data here that I want to show our viewers, just in case in point. This is Fred, and I use Fred economic data. It's a very trustworthy source of data. And this is median sales of existing homes, which essentially means it's not new. It's a resale house. And, if you look kind of to the left here, and unfortunately, this chart isn't really going, several years, unfortunately. So I'm like, but I'm going to start with this. The reason I want to start with this is the first time we have from Fred economic data acknowledging that June of this year was the peak price for normal existing homes. So since June, we went down to 403,800 as far as the median sales price of an existing home. So what I'm saying is like, this is, because you'll have up and down trends with pricing. That's normal. Right. What I'm saying is this is not normal. This is a massive surge up. And I believe that this trend is going to continue. And my case in point, I'll pull this next one up. This is a chart again from Fred. This is median sales price for new homes sold in the United States. So this is the new builds. And again, let me lower this a little bit to the left of the recession, right? So it's the left of this vertical. You better edit that part. This vertical gray line to the left of that is a normal trend in the housing market, right? They're going up and down. This is normal. Okay, this is normal seasonal housing market. But post-COVID, you see it's still exhibiting a little bit of the up and down trends, but it is essentially skyrocketing up. Okay, forming a bubble. Now, what's intriguing is new homes. The pricing for new homes actually peaked in April instead of June. So in June was resale houses, and April new homes. And you can see from April to June, that's over a 13% drop. 13% drop in new homes. And I understand that they could be building smaller houses, smaller SFRs. There's a little bit of that comes into play, but nevertheless, the prices are absolutely plummeting. So this is the new builds are taking an even bigger hit. Resales are down. And I want to show you one other thing I found intriguing. Okay, this is from Redfin. Now, Redfin acknowledges prices have declined overall from peak. They're a little bit ahead of the game. That's why I lean on Redfin. They do week over week data comparisons. Declined 5.5% from price. I'm sorry, the peak price. So 5.5% decline. But look at this, Orlando. This is super intriguing, and I've talked to a few people about this. We finally have two metro areas now with year-over-year decline in median sales price, and that's in Oakland, obviously California, and San Francisco, California. Okay,
now,
go ahead.
Now, do you think that the reason why we're seeing these huge decrease in prices. Do you believe that new construction has anything to do with this?
100%. Well,
Okay.
and I think that new construction is going to have a lot to do with what happens next in our housing market, because historically we have low inventory. Even though inventory right now is surging, we still have a long-term problem. We still need more houses. So I think what's going to end up happening, because demand has absolutely been crushed. Demand has been crushed. Interest rates are up. A lot of people are priced out on the sidelines. I think what's going to happen is these builders right now cannot sell their houses right now.
Right.
But what is happening is they still are completing projects that they've been working on since January or since 2021. So not all, but some of these new builders have no choice but to continue building homes that they can't sell. Now, you're an investor.
Right.
Some of these new home builders have unfavorable short-term financing obligations.
That is correct.
So if they can't meet those short-term financing obligations, they're going to have to fire sell their home. So that's why I'm saying, keep our eyes on. Okay, this is all speculation. No one has a crystal ball, right? I don't know what's going to happen for sure, but I'm pretty sure this is going to happen, right? We got to keep our eye on new home builders, man. I think it usually starts with them. The last crash around, it started with the new home builders. That's why my eyes, to purchase my next residence, it's going to be on a new home builder. I think I'm going to get a fire sale deal. I'm going to make them pay all my closing costs. I may even have them increase my commission as a realtor, right? Or my down payment for the loan. Which is a nice little trick you can do. So I think these price cuts is just beginning, and it's not seasonal.
And here's the thing, obviously on this channel, I'm literally telling my audience that they really need to really focus and hone in on these new constructions, because they will be giving out all types of amenity packages and they will do anything to sell off these homes, because they do have this obligation to this debt. And I'm telling you guys, I'm a financer. I see the debt. The debt is not favorable for them to hold for the long term. So I tell everyone, if you're looking for new construction, or if that's the area that you're looking at, then if you hold out during this recession time and during everything else, you will get some amazing deals. It's not guaranteed, but you have to have your eye on this. Because once again, guys, I say this all the time. You have to look what's happening in your local area. So with that being said, what do you think is going on with the recession? Do you think we're in a recession, or do you think that you follow the government's trend, which is, oh no, we're not in a recession. We'll change the definition and we're not in there. Which way are you looking at this?
So I'm going to be honest, Orlando, I'm a little bit opinionated. I don't know if you know that about me. I think you do. Maybe you don't.
Just a little bit.
I know we're in a recession. I mean, to me, it's like clear. We had 2 consecutive quarters of negative GDP. And it's so frustrating, man. And I put this on my channel. I even did a video of this. I'm like, and this was before Q2 came out. I'm like, you guys, look at what the White House just sent out. Like the White House they redefined recession, right? They're saying, this is the White House saying, because we have a low unemployment rate, we're not in recession. But here's the thing, Orlando, with the unemployment rate. I believe the unemployment rate, quite frankly, is tainted. I don't think those are normal 9-to-5 jobs. A lot of that was actually seasonal employment. It's part-time employment, which is still good. Right. It's good to have that because it allows us to empower and work hard, but those aren't real jobs. And the other thing, the unemployment rate should be low. How much PPP was just put into the economy? And I'm not talking about prepayment penalty.
Right.
You remember PPP? Remember when PPP
that was before the loans, right?
Yeah, the PPP. Yeah. No, this is the other PPP, the free money PPP. The other PPP was prepayment penalty. That cost money. But I mean, dude, I'm always telling people we should have a low unemployment rate, because look at how many employers, big employers, small employers, medium employers, got capital in 2021 and 2020. So there should be. So that's a tainted indicator. So it's really hard to figure all this out, Orlando, because the data is conflicting sometimes because that smoke screen of money printing.
Right. Here's the thing, and my viewers know this, is that when I spoke about this whole recession thing, and especially with the White House using unemployment numbers and saying labor and this stuff, if you really look at the data, it does not show that majority of the reason why why this unemployment is so low and all that other stuff is that most people within that sector are working 2 to 3 jobs just to make ends meet. It does not include the data that people have to work 2 to 3 jobs because inflation is so high, and the lifestyle that they want to live, they have to work 2 to 3 jobs just to maintain that lifestyle. So when you put in people working 2 jobs or 3 jobs, all of a sudden the numbers don't look so favorable. Yeah, percentage wise, yeah, it's low. But what if I said to you, hey, just to keep your current lifestyle, you're gonna have to work 3 jobs. I don't think you would be happy about that. So,
No. No, I mean, we could make a whole nother video on people's bad spending habits, man. I mean, a lot of people, they just got, man, the difference in being a renter and an investor is so small. I mean, there's only like a couple empowerment things and education things you need to do. And that tiny little difference, I mean, it's the difference of being drowning in debt and giving debt to people because you're a baller per se, right? I mean,
right.
I wish that we had more empower. It's just sad, man.
Well, speaking of a nice segue of giving people money, what is your opinion when it comes to a person deciding to rent or buy? And let's talk in detail about what someone should do in this market when it comes to sitting on the sidelines and renting or going ahead and taking the plunge of buying. What do you think?
I think I'm about to get roasted for what I'm about to say. But so what I'm about to say, I'm saying with extreme specificity. Okay,
right.
So let me get the disclaimers out there first. Okay, now historically, and I believe real estate is the easiest way to become a millionaire. I think real estate is one of the best things you can ever invest in your life. I also think that renting is a total waste of money. And the whole reason why so many investors even got a market share is renting is so profitable. Mm-hmm. However, Orlando, and here's where I'm going to get roasted. I know people are like, oh, I like what he's saying. And then, I'm going to stop listening. But, dude, I think we're in a very, very, very rare time where right now in most markets, because, like you just said, and I agree, local market matters so much. But in most markets, it makes more sense right now. And then this was only be for a short amount of time. It makes more sense to rent than it does to own. And excuse me. And again, I'm not saying that's going to be forever. So hopefully I won't get too roasted here. But I think we got to sit out of the market at least just to see what direction it's headed. Let's let the dust settle. So I myself, I own a rental. I own a note on a house. I can easily qualify. I have no consumer debt, credit score 800. I could buy a house right now. I decided to rent and literally throw my money away because I believe that I'm going to throw less money away renting than being trapped upside down in my house potentially. And that's what I'm really afraid will happen.
See, on this channel, my viewers know that I preach that exact same sentiment. So will you get roasted by some? Oh, yeah, probably.
Oh yeah, well, yeah.
But for the most part, everyone knows, and I'm saying the same thing, same exact thing, that when it comes to this market, exactly where we are right now, it is better to sit on the sidelines right now because here's the deal, especially since interest rates have went up. Most people can't even afford have lost buying power because interest rates have gone up. So you probably won't even get the house that you want. Maybe you could afford, when it was 3%, maybe you could afford a $300,000 house. But now it's at 6%, you can probably only get a $100,000 home or $150,000. You're out of the game now, right? Yeah, but you can still buy that house. But is it a house that you want? Is it in a location that you want? Right? Are you going to even be happy after the purchase? Or are you going to be regretful after you make the purchase and realize I should have waited? And I think that most people will say I should have waited. And how do you wait? You sit on the sidelines. You wait to see how this all fleshes out and you rent. And so we have both the same mindset when it comes to this. And look, he said that on his own. I didn't tell him to say it or anything.
I was
He
worried.
said
Yeah.
it on his own.
I was worried. I was a little worried. I was a little worried. I mean, but and I'm not just saying just don't sit on the sideline. Like this is the perfect opportunity to empower.
Right.
I mean, your own channel, you have so many videos on how to invest. So I'm not saying like sit on the sidelines and play video games unless you want to play Call of
Right.
Duty tonight. You play Call of Duty. But anyway, I'm not saying do that. I'm saying, dude, like this is such a great time to get above your competition. You can even get
100%.
above investors. I think the next line of home buyers, at least at first, are going to be as powerful as investors. I think
Right.
most people that are on the sidelines are weathering the storm, right? That can make it through, but the majority of the people on the sidelines priced out. These people are priced out, and
they're priced out.
And Orlando, like you can't settle on the largest, biggest financial transaction of your life. Can't do that. You shouldn't do that.
Look, it was crazy when 6 months ago, almost a year ago, people were doing things like not even going inside the home, getting inspections done. Some were even, obviously, people were overpaying. They were saying not even getting appraisals, like doing all types of crazy stuff, sight unseen, right? On the biggest purchase of their life. I used to always use this analogy where I say, well, if would you do that with a car? Like would you decide to go buy a car without even seeing it, looking at it, anything, but saying, here's the money, there you go. No, you wouldn't. You wouldn't. Most people have to touch, go see it, everything. So why would you do that with the biggest purchase of your life? Why would you do that? Makes no sense. Under no circumstances should you do something like that.
I don't think it's logic. I think it's the fear of missing out, man. I mean, I think that I'm not going to forget the power of that, right? But and I strongly suggest like this is how we can get good deals because and this is sad and I don't like this, but most people are a bit emotional, and when you allow emotions, and now I get it. There's a sense of there's a pride of ownership, and that's important, and I get it.
Of course.
But that's even more of a reason to be logical, in my opinion, right? If you're going to live there for 3 years, you don't want to settle. So, the whole waiving and the inspections, Orlando, like how could you do that, man? Like you don't know if there's barking dogs, you don't know what the house smells like, you don't know if there's a train, if it's if there's planes that like the amount of buyer's remorse right now. I'm not even and I know people are responsible to do their own due diligence, but I can't help but feel like as an industry of professionals, we failed the public.
Yeah, man. I really do. Especially, I mean, and I know you know this, but we've seen, and we're starting to see the fallout now. During that time where everybody was just making so much money, it was just a ton of people, especially realtors, making tons of money. They were out there. I mean, the industry in itself went up. Everybody was becoming realtors. A lot. And now we're starting to see this fallout. And some do have that buyer's remorse, and they jumped into it because of the FOMO. They thought they were going to miss out. But now we're seeing the other end of it, right? Yes. And so that kind of brings me to the next point that I want to talk to you about. Now, this is going to be a little controversial, okay? It's going to be a little spicy, okay?
All right.
What? Go ahead.
Well, I'm ready for some spice. I'm ready for some spice, right?
But what do you think is the date that you think the market is going to crash?
That's messed up, Orlando. Okay. All right. I got to answer this very specifically. Okay. No, first of all, I think there's going to be a nice drop. I think there's going to be a healthy initial drop in home prices. I think the latest that part happens is Q3. I'm talking the bottom of that initial plunge. I think Q3 of 2023. I think Q4 of this year, because I'm already seeing stuff in my own local market in Houston. I'm already seeing like 10% drops, 16% drops from new home builders, incentives coming back. I'm seeing all of this. So I believe that this year, in Q4 of this year, that there's going to be buying opportunities. There's going to be, there's going to be some metro areas that it makes actually decent sense to buy a house. I think it gets better as we go into 2023, maybe bottoming out in Q3 of 2023. Now, here's the thing I don't know. I don't know what's going to happen in the election year, and I am deathly afraid.
Yeah, and that's a tough one.
and that's what makes things so hard. We don't know how the government's going to mess us up per se. So I think it's possible two things happen. I think that we have our initial price drop. I think the longest that takes is Q3 of 2023. Now, after that, either the demand comes back, prices stabilize because the Federal Reserve pivots, or things have been so messed up for so long that real estate is going to continue to deflate at a modest amount for 5 to 7 years. I think that's all. I don't know which one of those is going to happen, but I do believe there's going to be a buying opportunity. We're going to have an initial plunge in prices despite what happens past 2023.
Yeah, and this is normal news on my channel, is that I believe this. I believe that next year we're really going to really start to feel that impact. Where in that year, I'm really more excited looking at like the prime time, like I would say spring area, right? Once we get out of the winter months, I think it'll really show then. But what I'm really, really interested in is I'm interested in what's going to happen during these holidays, this year, holiday season. So that's what I'm interested in. I want to see what is the spending like for the average American for the holidays. Are we going to have a Black Friday where it's going to say, this is the lowest amount of people have spent on Black Friday ever? And if I start seeing trends like that, then I know that Americans are crunching down, they're holding their money, or what's worse than that is that the money that they have in their savings is depleting.
Yep.
And currently right now, I think we're at 2.5 months of people having their savings. They have a 2.5 months worth of expenses in their account. Now, a lot of that money is from the stimulus check time, right? So once that's starting to shrivel away and that goes away, then that will show me that we're exactly where we're going. So do I think it's going to crash this year? I think we'll see big price cuts, but these are big price cuts from already overinflated prices.
Yeah.
So you're getting price cuts, but it's still overpriced and it's still unaffordable, right? Especially with interest rates being high. So I'm very interested in that. I don't know what you think about that, but I'm really interested in that.
I think you're pretty much spot on. I was going to show you too, the personal savings rate that you were just talking about, Orlando. Right here. Look at this. There's another personal savings rate that shows us the percentage of income. We are way lower than pre-pandemic. And a lot of people get this wrong, Orlando, and they're like, let's look at the total wealth of Americans. They're doing so well, but that's equity in their houses. You can't just get your equity. You have to sell it. You have to pay fees. You got to see how much liquidity people have. And look at this. It's like,
it's going down, down, down. Look at this, guys. Look how it's going down on that.
This is pre-pandemic. Okay, this is percentage of income, right? So pre-pandemic, about 7%. Probably averages a little bit higher than 7%. Then we have all these stimmy checks. Like, look at this, all the savings rate, huge, percentages, huge. And then reckless spending, inflation, no money, no stimulus. People got used to it, dead in the water.
It's called, what happened to that with this? What happened with this real estate mindset is lifestyle creep. People thought, oh, look, I'm getting X amount of dollars a month now. My savings is full. I can go out and go on vacations. I can do all this stuff, right? And they drained their accounts. And now they're still trying to live at that same lifestyle when they don't have the income, the steady income of coming in every month on that. So they're draining and depleting their accounts. So that is a really, really big thing.
Yeah, and I'll argue, Orlando, that that's why the Fed gave them the money.
Right.
They gave people money to spend. So it's, I go back, like, people are responsible for their own actions, their own due diligence. But whose fault was this really?
Yeah. I'm all about, and we all know on this channel, we're all about accountability. Yeah. You are the master of your domain. Like, so if you spend too much, it's on you. If you save, it's on you. So you have to control your own situation, and we can blame people all day, but we all know no one cares. At the end of the day, no one cares.
The complainer cares. We know that much. Jeez, yeah.
Okay, so I know I'm not going to hold you any longer, but I'm going to ask you one last question. And that question is, what advice would you give to someone who's a first-time home buyer, you know, and is trying to figure out what are some of the things that I need to look out for? What is like number 1, 2, and 3 thing that I should do to gain and get into that first home?
So I would say the number one thing that if you're a first time home buyer right now on the sidelines is you have to stay encouraged. I feel like a lot of people are this close, Orlando, from quitting and giving up and throwing away the money and all the hard
Right.
work. They're going to go into credit card debt. They're going to give up. They're going to go party, whatever. So number one, stay encouraged. Now, number two is a 3-part. Number two is credit, income, assets. Work on your credit, your income, your assets. Those are the 3 main lending qualifications. You're going to want to leverage debt, obviously.
Right.
Now, number 3, I would say to, I had a really good one, and it totally like I got one, but I had an even better one. And like as I was talking, I'm like, okay, this is like good, but I was talking, so
Yeah, so you forgot it.
Yes. And number 3, what I would say, Orlando, is monitor your local market. Right? Monitor your local market. We're sitting on the sidelines right now. This is the best time to empower. So again, stay encouraged. Number 2, the 3 lone things: credit, income, assets. Number 3, put in the work. Watch your local market.
Thank you. Thank you. Well, I agree with all of those things, guys. So you can come back on the show anytime. I really, really, really appreciate you coming onto the channel. Guys, make sure that you go to his channel, hit the subscribe button. I'm telling you, if you love my content, you will love his content too. Make sure you go there, watch his videos. You will learn so much, so much. He has excellent entertainment and the value is right there. Hey man, once again, I want to thank you for coming onto the channel. Come back anytime soon, and we'll see you on the next one.
Absolute honor, Orlando. Thank you, sir.
No problem. Thanks. Bye.